So Ripple, as you may know, is an enterprise blockchain company, and we focus on using blockchain technology and digital assets to remove frictions in cross-border payments. So we've been around 10 years. We celebrated our 10th anniversary just last year. And when we started, the focus was more on building the network, ensuring that we had a solid network available. At that time, institutions were not comfortable holding digital assets. We've seen that change as digital assets have become more mainstream, and now institutions are comfortable having digital assets in their payment flows. So we have our flagship product, RippleNet, which is connecting this network, and we've offered a solution called on-demand liquidity, or ODL, which allows you to use the digital asset XRP as a bridge between currencies. At the same time, we saw the need for tokenization of other assets. So we looked at various different areas of the industry, and we saw that there was a need for central bank digital currencies, CBDCs, stable coins, NFTs. So we have a program called Ripple X within Ripple that focuses on tokenization of these other assets using the XRP ledger. So between RippleNet and Ripple X, we cover cross-border payments, but as well as other solutions such as CBDCs, stablecoins, and NFTs. Now, when it comes to cross-border payments, we, as well as our customers, need to have the comfort that you can use digital assets in those payment flows. And if you look at the APAC region, it's quite fragmented. Everyone thinks of APAC as this monolithic whole. You've got the Americas, you've got the EU, and you've got APAC, when in reality, it's 10 or 12 different markets with very different levels of development and very different levels of capacity. So we work with regulators in the region on ensuring that we get the clarity that we need to allow digital assets for payment flows. In the region, you'd see jurisdictions like Singapore, Japan, that have fairly clear taxonomies in place, fairly clear frameworks in place. Other jurisdictions such as Australia, New Zealand, Korea are now looking at bringing those taxonomies into place to give the market the clarity needed as to the role of digital assets. So what we see in 2023 is that we're going to see a few more jurisdictions in the region provide regulatory frameworks for digital assets, and we're working closely with the regulators on bringing those frameworks to fruition. The events of the past year or so have basically accelerated the interest in providing regulatory frameworks for digital assets. However, what we don't want to see is a knee-jerk reaction, right? What we want to see is carefully thought out regulatory frameworks that support the innovation that we see in this industry, but at the same time manage those consumer protections, which are very important as well. So how do you do that, right? We believe that the appropriate way to do that is looking at risk-sensitive regulation. Right? There's no one-size-fits-all approach that you can use. A good place to start is look at solutions that are consumer-focused, B2C. That's a very different risk profile from solutions that are enterprise-focused, which is primarily B2B. Enterprises typically have the ability to manage risk better. So that's one place to start. Another thing that we advocate for is technology neutral regulations, right? The risk is not in the technology, the risk is with the activity or the actor. So we advocate for essentially the principle of same risk, same activity, same regulation, right? What that means is that if you were doing an activity in the traditional markets that lead to the same economic result or the same risk in the traditional markets, you should be regulated the same, right? And overall, we're seeing that regulators are looking at this approach. They're looking to provide a risk-sensitive framework, but keeping in mind that consumer protections are very important, especially the recent issues that we've seen with FTX and the other exchanges in the past. What we don't want to see is a race to the bottom, right? What we want to see is certain minimum standards that are upheld across the globe, right? And that's the FSB is doing very important work in this space, and we're fully supportive of the work that they're doing. The recent consultation, we did provide our comments, and we are engaging with the FSB. We think there's a few things that could be done. The first is looking at providing a globally consistent taxonomy for digital assets. What that means is, you have a clear taxonomy as to what is a payment token, so tokens that are used, for payments. What is a securities token? So, tokenized traditional securities would fall into that bucket. And then what's a utility token? A utility token that gives you access to a blockchain. Once you have this clear taxonomy, it's then very easy to build a risk-sensitive framework. You know what you're regulating, then you know how to regulate that, right? And as I mentioned, then having a risk-sensitive framework in place is very important. What we feel is also, one way to achieve this is through regulatory sandboxes, right? So if the regulator is not comfortable, having this technology just yet, have a regulatory sandbox where in a closed environment, you can manage the technology, manage the processes before you scale in a production environment. And sort of tying all of this together is, public-private cooperation, right? I think forums like this are great, where you have industry, you have academia, you have regulators in the same room talking to each other, learning from each other, and then putting that into practice. Lastly, I think, one thing we can also look at is having a way to mutually recognize regimes from other jurisdictions, right? We've seen this in the traditional. I don't want to use the word passporting because it's slightly different. I don't want to use equivalence because that has some connotations based on what we've seen in the past. But mutual recognition, where if a regulator has a sufficiently high standard, other jurisdictions can defer to that that framework, and that could be done at a bilateral level through MOUs. It could be done at a multilateral level. There's a few ways to do that, but we feel that that's one way to bring global consistency so that everyone is on a level playing field. The approaches will depend on the jurisdiction, right? There's no sort of copy-paste that you can do, but there are certain best practices that you can follow. And we look at Singapore and Japan, for example, where they've made amendments to the Payment Services Act to recognize payment tokens. We feel that that's one approach to follow. What Australia has sort of been looking at this since, I'd say, 2019, 2020. We've had a series of consultations with the Senate and now with the Treasury. And we're contributing to that discussion bilaterally as well as to the industry associations. We feel that that's an approach that works well for Australia. Korea has taken a slightly different approach where they've first identified what security tokens are. So the Financial Services Commission published guidelines on what securities tokens are a couple of weeks ago. They're now going to finalize that with the with the FSS and the industry. And that'll sort of be a checklist for you to identify what is a security token. And then the next step is to identify what are payment tokens, which will be in the Digital Assets Basic Act, which is coming up. So I'd say that most jurisdictions are looking at an approach that works best for their legislative framework, their regulatory framework. But the outcome, we hope, will be the same, where you have that clarity as to what is a payment token, what is a utility token, and what is a security token. And that way you know what is regulated and how it's regulated.